Welcome to Over the Curb, the podcast dedicated to empowering truck dealerships and remarketing professionals. Hosted by Ethan Nadolson, a seasoned expert in inventory management, marketing, and used truck sales, and the CEO of SOAR. Tune in as we talk shop with industry leaders, dive into the challenges and opportunities of remarketing, and explore how to maximize your inventory's potential and get your trucks off the lot and over the curb.
Hey everybody, welcome to Over the Curb. This is our very first episode, and today we have Chris Visser, the Director of Specialty Vehicles from J.D. Power on today. So first I'd like to say thank you for joining, Chris, and good morning.
Hey Ethan, thanks for having me. It's great to see you.
Yeah, good to see you. Yeah, absolutely. This is going to be fun. So a couple things. I think it's important to tell our audience that the first thing is getting J.D. Power on here was important to us because kicking this off with a market update is a very important thing for us to, first of all, kind of level set where we're at. And also, without a market, there is no truck sales. So we can't get any trucks over the curb if we don't have a market to sell them to. So understanding that is critical to moving forward here. And it'll also make the rest of the future episodes a lot more powerful because we have an understanding of where we're at. So again, thank you, Chris. And I think it's also important to mention that SOAR is partners with J.D. Power. And I can't even remember, Chris, how many years it's been. Probably more than I want to expose on here.
Couple of decades and a lot of dark hair ago is how I think about it.
There you go. Yep. So it's been a long time, and I'll tell you that it's been a great relationship. And for our dealers, it's a game changer because they can literally take our app out onto the lot and pull up your values instantly as they're doing an appraisal of a truck and doing an inspection right there. And then they also have it obviously in the SOAR software and other places. But I don't really want to dwell on that, more talk about the market. Sure. And so, Chris, would you mind giving us, you put out some great market reports all the time. You've been an excellent contributor to the industry, not only with the market reports, but also speaking at different conferences and really participating in the industry. So first of all, thank you for that. You've been kind of a pillar for the industry, and your contributions are very well appreciated by me.
Wow, man, I appreciate you saying that. Thank you.
Yeah.
It's nice of you to say that.
Absolutely. So can you give us just kind of a quick overview? I know this is, a large subject, but of the current market conditions for the semi-truck market?
Yeah, just as a bit of background to dive into where we were and where we're going real quick. 2024 started out continuing the pretty heavy depreciation that we saw throughout 23. But I think once we got into the second quarter, pricing started to level out. And certainly by the second half of the year, depreciation was pretty minimal, especially at the auction in terms of auctions. On the retail side, that leveled out also. Didn't flatline, but we're down to, depreciation in the twos in the second half of 24, which is right on par with the historical average. Nobody would characterize the market as strong, but it has definitely found a bottom. And I think as we go into 25, we've already gotten some, data from late 24, early January. Of course, there's no auctions on the calendar until later in the month. I think there's a couple this week, and that kind of starts the 25 auction cycle again. We're going into that market with stable pricing at auction. On the retail side, like I said, it's fairly moderate depreciation on par with what the industry expects, pre-COVID. And looking forward, I think there's more upward pressure on pricing than downward. Of course, there's a lot of wild cards, especially with the administration changes to regulations and tariffs, the impact on trade and all of that good stuff. But, not to get too overwhelmed with predictions, but I think the companies that forecast the freight market and freight trends are basically still in agreement that, the factors most relevant to used truck pricing, which are capacity and active truck utilization, are still forecast to go upwards. I think they've actually been on the increase since the fourth quarter. So assuming those forecasts hold true, that's basically the foundation of used truck pricing, which predicts stabilization and then strengthening of the used truck market going forward. That's basically what I'm saying at this point. We can talk about volume at auctions. There's going to be a couple things as once the pre-buy gets underway, which will be later this year. That would tamp down market strength just because there's going to be a pull ahead in trades, which is what happens in a pre-buy. But other than that, I'm more optimistic than pessimistic about used truck values in 25 at this point.
Yeah, and I think going to different shows and dealer meetings that I've been in, and just talking to dealers one on one, that's exactly what I'm hearing on the streets.
Sure.
What you're saying. I think there's a lot of excitement out there about this market in 2025 and where we're going. I have talked to some dealers that said that they're already seeing a bit of a pre-buy in the oil field industry. Have you seen anything like that, Chris?
Yeah, that's tough. I would defer to the people who work in those industries, who are in those niche markets. But I get a ton of data, but the vast majority of it is day cabs and sleepers, highway spec. So yeah, the specialized and construction side, the way I get my viewpoints on those markets is by talking to the people who are directly involved, because just the small volume of trucks that are sold at any given period is so small that you almost can't really run any analysis on the data we get. So that's more of a qualitative thing, and it makes sense that the specialized stuff would have to be pulled ahead, because that's not, the manufacturers can't turn on a dime when it comes to building those trucks. So yeah, that makes perfect sense. Yeah.
Yeah, sure. No, you're. Yeah, I think you're spot on with everything you're saying, and in your market report, I mean, you just opened up a whole bunch of different conversations and things that we could take this with your first comments there. The day cab market. Let's talk about that real quick, and also something that you had put out recently said that the auction data was down a little bit for the end of 2024. Can you elaborate on that and tell us maybe why you think that might be, and what the impact of that is for us moving forward?
Yeah, unfortunately, I don't have any real answer to why volume was down at auctions in December. Usually, volume goes up at the end of the year because owners and small fleets are making capacity adjustments. Let's call it. They want to get trucks off the book if there's some dealer involvement. So December is usually a higher volume month for trucks being sold at auction. Just to purely speculate, maybe it's an indicator that optimism is increasing and some fleets want to hold on to their trucks as opposed to offloading them. That's about all I have off the top of my head as far as that goes, until I talk to some more people who might have some more insight. Yeah, if you've heard anything, I'd be curious to hear any
No,
feedback
I
you
haven't
might have.
directly heard anything, and I was very interested and intrigued a little bit by that. I was like, exactly what you're saying. Typically, we do see auctions picking up at the end of the year, and that just didn't happen this year. So, and I read that about the way that you do. Again, I'd like to talk to some dealers and some other companies out there to see what their thoughts are.
Now, to jump in on that, of course, the other side of that is pricing bumped up a little bit at auctions in December too. So
Hmm.
that kind of lends credence to any working theory that that we're in a period where some smaller fleets might want to hold on to their equipment.
Yeah, yeah, okay, yeah, that's a good point. So this, I mean, since 2019, the market has been just volatile, I would say.
Completely insane.
Yeah, that's another way to put it. Yeah, ludicrous. Yeah, we got a lot of ways to put that one, but um, so as dealers have navigated through that, and not just dealers, but even the finance companies, we're seeing some issues with finance at this point. That market has really tightened up. It's become a lot more difficult to get a truck funded in general. And I know we're working on some solutions for that, as best we can here at SOAR. But in the industry, is that something you're, I mean, clearly seeing as a problem? But do you have any insights on that?
Yeah, I mean that's one of the big downward pressures on used truck pricing is the availability of financing. We all know the reasons why. It's closely related to the equity problem that most truck, single owner operators, maybe even small fleets have. Anybody who bought a truck from, starting in late 2020 through 2023 is almost certainly in a negative equity situation right now. And if they've traded in that truck already, uh, the odds are they probably rolled that negative equity into whatever truck they traded it in on. So, they're, potentially overpriced or underwater on the truck that they're in now, because that's what happens when you roll in negative equity, obviously. Any dealer listening to this, I'm preaching to the choir, you're well aware of that situation. And there's no easy way out, short of, going and, declaring personal bankruptcy. There's no good solution to getting out of negative equity until you get to the point where you're potentially able to pay off that loan or pay off the truck. Now that gets into interesting situation at the finance companies themselves, where they're sitting on a good amount of underwater loans in their portfolios. From what I read and what conversations I've had, it's not a catastrophe and doesn't portend any crashes or anything like that. But when a meaningful portion of your used truck portfolio is underwater, so to speak, that makes you make more conservative decisions when it comes to who to loan to and what your finance rates are going to be. So the finance companies are in a delicate situation right now. It's probably getting better. It's better than it was in 23, maybe even early last year. But it's something that the finance companies are walking a tightrope on and are going to have to carefully unravel going forward.
Yeah, absolutely. Chris, we talk a lot about, market conditions, things like that. So how does a dealership take this information and make it actionable? So, you see the market trends, you're like, oh, okay, used trucks were down, used trucks were up, depreciation's out there. I know I have some thoughts around this, but I'd like to hear from you what you can see with your data and other sources, whatever you want to talk about there. How can a dealership take that and then start to make better buying decisions and timing on selling decisions based on this information?
Yeah, well, fundamentally, we're a third-party valuation provider. So obviously, we're not establishing the market, but we do report on it. And we're serious about being up to the minute on what the market is doing. And to that end, the fact that we're incorporated into SOAR's products, especially the mobile apps, that is a super powerful tool that dealers can use if they're out on a lot or at an auction. They get access to selling and asking prices in the SOAR app, and then they have access to our values, which is what their finance company wants to see. So as far as our JD Power values go, that's what a lot of finance companies use, manufacturers, OEMs, and third-party finance companies. So to have, that on your phone, whether it's our app or the SOAR app, you at least get a reality check on a truck you're bidding on or what you're looking at in your own inventory. So I think that's the major strength of what we do, or the major utility to the industry.
Yeah, I totally agree with that. And I think that you hit on something I just want to kind of piggyback on a little bit is the banks are looking at these values because that's what they have to go off of. They can only look at industry trends. They're not used truck experts in a lot of cases. So what they have to look at is what is the book value and what's JD Power putting on these units, and that's how they're making their funding decisions, and not always with adjustments. Would you agree with that?
Yeah, unfortunately, that is the case. I mean, our values are published with the intent that the user is going to include the mileage adjustment and add all of the spec and option content, which includes sleepers and engines and transmissions and of course aluminum wheels, things like that. And if a user is not including including any of that information, then they're not necessarily getting an accurate valuation from our products.
Yeah, and that's not against the banks in any way. It's sometimes they don't have the information to even put the adjustments on it, or they might not have the expertise to be able to go down through, or the time to go down through each one. And where I think we've seen a bump in funding is, and talk to some of our finance partners that we have, is a SOAR dealer can send off one of their SOAR reports with all the adjustments on it that includes photos, specifications, the JD Power information, diagnostics, and other things. But having that JD Power on there with the adjustments, now the bank can look at that. And if you put the adjustments on it, because you've got a big sleeper, big engine, maybe some heavier rear axles or something like that they normally wouldn't catch, maybe, then you can get higher dollars out of the funding because you're arming them with information.
Absolutely.
So,
yep.
Yeah. So
that would be the message. That would be the message to any finance or bank people listening to this is if the value seems low, make sure you're including all the specs and mileage adjustment. That's the low-hanging fruit.
Yeah. And for the SOAR dealers out there, make sure that you're running your JD Power valuation on it. And if you're not subscribe through SOAR, and you can literally click a button and shoot it off to the finance company, and that could help get some trucks over the curb. So,
absolutely.
So I know you touched on this just a little bit in the intro, and I made a note here that we're having some changes. I mean, elephant in the room is that the administration change has happened. We also have some natural disasters that have happened. What factors are you seeing? I think everybody's seeing them, but what factors are you seeing and looking at? And I'm not asking you to predict the future because that's not your job. Your job is to report on what's happened, but certainly I think you probably have an opinion about some of this and some thoughts around that. So would you mind sharing some of that with us, Chris?
Yeah, let's talk about the natural disasters first. We ended last year with the absolutely terrible flooding that completely destroyed large portions of Appalachia. So that's going to require a massive rebuilding and infrastructure started from scratch. So that right there, not to flip right into the capitalist mentality, but that right there is an opportunity for,
Yeah, I was going to say, I actually had the opportunity or took the opportunity to go down to North Carolina and help with the hurricane victims down there. First of all, our thoughts and prayers are with all those people and also the people in California right now. Just a terrible, terrible time. And the devastation is incredible, Chris. And driving down through there, one of the things that I noticed being a truck guy is all the dump trucks that were helping rebuild highways and back roads and everything else. And without that, it just would not have been possible for them to recover from it. And heavy equipment, certainly other types of assets were down there assisting. But for sure, I've got some videos and some pictures of some just lines and lines and lines of dump trucks trying to repair the area. So anyway,
it's going to be it's going to be a multi-year effort. Like you're saying, nonstop work. I mean,
maybe a decade. I mean,
sure.
it's terrible.
Same thing holds for California. Like you said, nobody expected wildfires to come right into suburban LA like they did. It's we're gonna, you can look on a map and it's visible on, satellite maps. The entire swaths of suburbs that have been there for close to 100 years are completely destroyed. So yeah, it's really just mind-blowing destruction and devastation. And like you said, my heart goes out to anybody directly affected by it. And that also is going to be a huge opportunity for rebuilding and construction and infrastructure. So like you said, construction trucks, heavy haul trucks, flatbeds, specialized haulers, those are all going to be, in high demand in those regions. And, there are relatively few of those trucks comparatively across the nation. So I suspect there's going to be some, vacuums in some parts of the country as a lot of that equipment goes west or goes east to the hurricane areas, which could have some implications for, demand in those areas where those trucks are needed.
Yeah, and what a unique situation that it's actually kind of both coasts. So the inventory is getting split. So it's not.
That's right.
Available for one area of the country. We've got at this point at least two areas of the country that are still trying to either be in the middle of it and fighting it off, or right in the middle of trying to recover from it. So
totally, and in those areas that maybe trucks are going from, that leaves kind of a vacuum in supply of those trucks too. So that there could be some increase in prices there just based on demand and lack of supply.
Yeah, and I think even getting in over to the refrigerated market, I think it touches all aspects, bucket trucks,
Yep.
everything. I mean,
Yep.
there's
Really does. I mean,
probably
even
not.
dry goods supplies, even. Yeah.
Yeah, absolutely. Yep. And the manufacturing to support all that as well. So, yeah, how about the administration change? I know that that's a big talk right now, and the 20th happened. A lot of executive orders were put into place, and even some new, I just saw yesterday about a, $500 billion investment in the AI infrastructure in Texas, some things like that. So I think there's a lot going on, Chris, to say the least. So how do you view that from a market perspective, and what should dealers do to prepare for that?
Yeah. So yeah, the timing of this podcast is perfect because, like you said, the 20th just happened a few days ago, and we're just getting a taste now of some of the executive orders, like you mentioned. I think the one that most directly impacts our industry is tariffs. And, we still don't have actual details on what President Trump plans. He has stated in, tweets or X, whatever, that Canada and Mexico are going to have 25% across the board tariffs, if I remember correctly. I don't think that's how it's actually going to pan out. I think that might have just been some, hyperbole. And of course, Canada and Mexico both said that they'll retaliate. Um, I'm skeptical that any kind of across the board tariff on everything that comes from Canada and Mexico is actually going to be put into place in reality. I do think there will be punitive tariffs on imports, and I guess that's going to include Canada and Mexico, which I don't know if everybody expected. But certainly overseas, China was the main target. I think they're going to be the most heavily hit. If we do anything with Canada and Mexico, it's probably going to be on a targeted basis, specifically as it affects anything that they compete with that we also manufacture in the U.S. I think that's the underlying strategy there. So yeah, it's we'll have to wait and see on the Canada and Mexico part. That's going to be that would be a serious impact to imports if that actually went through as stated. We'll see how it actually works out. Coming over from overseas, the Asian imports is going to be I think the more likely factor, which isn't necessarily a bad thing for the trucking industry. I think all through 2024, or especially the second half, manufacturers in the US who need parts and components from overseas, specifically Asia, had been pulling ahead freight from those sources, knowing that, or at least hedging their bets that if President Trump actually won, then there would likely be tariffs or more heavy tariffs on components coming from that region. So since that worked out that way, I'm not sure to what extent the pull ahead is still happening. Um, so that was likely, a boom to port activity throughout the second half of 24. So I guess there's a lot that is still up in the air as far as details go. We have to weigh whether the decrease in imports is going to be balanced out by a potential increase in domestic manufacturing, which means we're basically moving goods from one place to another within the U.S. as opposed to from the ports to a manufacturing location in the U.S. I think that's how the logistical side will work out. So, then the corollary to that is when tariffs go up, things get more expensive, and it's not necessarily a one-to-one dollar relationship, but there will be upward pressure in pricing, which has some implications for inflation and thereby demand, consumer demand, which is a huge part of the trucking industry too. So all those related items, I think analysts are still working out. And the inputs, which are basically the details of the tariffs, are not set in stone yet. So there's we can only forecast so much. But those are the topics that are going through everybody's heads at this point.
Sure. Yeah, I think we've all had those conversations and heard different theories on those, but at this point, it's all conjecture anyway because we don't even know what's going to happen and to what level. And you know, President Trump is, written books on negotiation, so clearly some of this could be negotiation tactics. However, one thing is for certain: we're going to have energy independence, or they're going to drill, baby, drill. And as they start to do that, fuel prices. It's going to affect our fuel prices probably in a positive way for the trucking industry. So, could drive down some prices of freight potentially that way. Do you see it that way?
Yeah, I don't know if it's going to be a huge impact to fuel prices. Remember, fuel prices are largely based on how much refined fuel can actually make it to where it's needed. And we still have a refinery shortage in this country. Obviously, yeah, the price of crude will go down, but keep in mind the price of crude is established by the global market because we are an exporter of crude. It doesn't all stay in the US. The minute a barrel of crude is drilled, it goes into the world market, which includes us, of course. But the global market establishes the price of crude, even WTI. But it will decrease the more that's drilled. I mean, that's just supply and demand. OPEC could react by reducing their drilling and output, which might mitigate any savings we could see. But potentially there could be some actions to keep more domestic supply within the U.S. Which could counteract some of that action, that activity. But that's a dangerous game to play. So,
Yeah.
but yeah, fundamentally, pricing should decrease somewhat. We're just not quite sure how much.
Yeah, so it's going to be an interesting year. And so, Chris, I'd like to have you back on maybe in a few months after we see some of the impact of this, and we can do another level set and kind of maybe even compare with what's happening today. Like I said, this is a great benchmark for the future, and so we'll take this one, and here's where we're at today, and then maybe check back in a few months and see where we're at, and then kind of continue to do that if you're open to it. I think that would be fantastic.
That sounds great. Yeah, I enjoyed our talk.
Yeah. Any parting thoughts here for our audience? We've got, I'm sure, dealerships that are going to be listening, OEMs, finance companies, anybody that has inventory or is interested in the truck market. Any final thoughts for how they can utilize this podcast to have a better 2025?
Well, since you're a well-known dude in the industry, so everybody knows how to get in touch with you. And I hope anybody listening to this won't hesitate to reach out to you to ask some questions or bring up some topics to talk about with a future guest, or maybe even suggest some future guests. We're all in this boat together. A lot of us in the used truck industry, especially who have been members of the Used Truck Association for since the beginning of time, know how to get in touch with each other. And I think that's one of the biggest strengths our industry has is, we're relatively tight knit, and we're comfortable discussing ideas with each other. And when market shifts happen, they happen super quickly, and it's usually because people are on the phone with each other or texting each other the minute an auction sale happens, getting that information out there. But this podcast could be a great way to get that information out there as well when any changes happen. So yeah. I'm glad you're doing it.
Yeah. Well, great. Well, you're a well-known dude as well. So, I think, and you've always been really accessible, and I've appreciated that about you. You're just kind of an open book, and, you'll tell people what you know and tell them what you don't know. So I love that integrity that you have, Chris. So,
well, thank you. Thanks.
Yeah, I really appreciate it. And I think with that, I'd just like to say that I hope everybody got something out of this podcast today and learned something to help you get more trucks off your lot and over the curb.